Hello everyone. Hi, welcome to IronFX webinar. Okay, so we'll start in a couple of minutes. Okay, so once again, welcome to those who have just joined us. Hello, hi. Okay, so we'll start our webinar now. Okay, so today we'll be looking at some breaking news, the happenings of this week, and also and after that we'll be looking at the technical, okay, of the indices and also the key technical indicators, okay, mainly the setups. Okay, hello. So if you have any currencies or indices that you'd like to research together, feel free to leave it in the comment section and we will go through them together. Okay, and before we start, please take note of this disclaimer. Please note that everything in this video is educational in nature. Okay, nothing should be constructed as investment or trading advice. Remember to do your own due diligence before you guys trade. Okay, and also please note that trading margin FX and CFD, okay, carries a significant risk. Okay, so it's always important to do your own due diligence before trading. Okay, I'm your presenter for today. I'm Emily, an investment analyst at Rocket. So this webinar is brought to you in collaboration with Rocket and IronFX. And Rocket, we are the best FX. We are the best finalists for FX research and also equities research in the year 2020 and 2021. Okay, here's the agenda for this week, okay, for today. And these are actually the key economic events that will be happening today. So today, there's a lot of important events. Three wait for this event for the affecting the US. Okay, the other markets does not have any major events. Okay, only the US. So US, most importantly, we have the PPI. Okay. So PPI, which is the producer price index. Okay, this measure wholesale inflation. You'll be released later today. Okay, at 12:30 p.m. GMT. Okay. So following the larger than expected gain for the month of January. Okay, the forecast for Fed points to prices increase at a slower rate on a monthly basis. So if the latest PPI data comes off, the demand for dollar is likely to wane further. Okay, and gold could shoot up once again. Okay, as you can see, gold kind of retraced a little bit from the CPI data. Okay, so today could be quite volatile for dollar index, gold, and the major currencies. Okay. Other than PPI, there's also the retail sales and unemployment claims. Okay, both of them also releasing at 12:30 p.m. GMT. Okay. So should these some data points highlight sorry, give me a second. Okay. Sorry, I thought I saw the chat panel pop up. Okay, so sorry. Um, okay, so is this data for retail sales and also unemployment claim? Okay. Um, this data actually could also if add a lot of more volatility to the gold and also the dollar index and also the majors currencies. Okay. And is these two data also highlight a strong consumer spending and also a resilient labor market? Okay, it could inject even more higher volatility during this period. Okay, so today's when the market is open, okay, you can see quite a bit of activity. Okay, okay, so this is the latest unemployment claim. Okay, this was released in March. Okay, for the month of last week. This is last week's data. Okay, and the one over here, okay, this is the forecasted in the previous data. So we are looking at the number of 218K. Okay, so anything more than that could cause a volatility, cause the dollar index to drop. Okay, that's low. Okay, so we want to, okay, give me a second while I pull out the, so let's take a look at the economic calendar for the week. Okay, so here is the economic calendar. Okay, for the data, give me a second. I scroll to today's data. I'm gonna remove the okay the yellow color folder. I'll just leave the red and orange folder. Okay, so today unemployment claims, okay, PPI and retail sales. Okay. So okay, so if the numbers okay for uh is more than the actual is more than the forecasted, okay, it could cause the dollar index to drop, okay, the price of the dollar index to drop. If it's lesser than forecasted, okay, it will cause the gold to rise higher. Okay, but if in the event of mixed results, mixed data like CPI, retail sales, and unemployment claims, okay, have very mixed results, then that could cause even more volatility, okay, because the market could be unsure. Investor sentiments also can be quite unsure as they are still processing the data. Okay, so 12:30 p.m. Okay, this is the time whereby they will release the three important data, and tomorrow, okay, there will be the prelim UM sentiments. Okay, this is also a rate further event followed by the and also the Empire State Manufacturing Index. Okay, so these two data will be released tomorrow. Okay, so you could also expect some kind of volatility tomorrow. Okay, and even next week as well. As I noticed, there's quite a bit of rate folders event. Okay, and another date to note is the 20th of March. Okay, over here. Okay, where FOMC will be releasing a statements again. Okay, where you can see their stance whether they will be uh poised to cut the rate, okay, or maintain. Okay, you can see whether they are pleased with the inflation rate or their stance mostly. Okay, so this is something that you can look out for, which is next Wednesday at 6 p.m. Okay, other than that, there's not much of a news for today. So we will be we'll go and look at the charts now. Mhm. Okay, so we are on the H4 chart. Let's start with the usual, okay, the dollar index. So if you have any currencies that you are interested in, please feel free to leave it in the comment section. Okay, so I do see a support, okay, right below the current price. Okay, so this will be my first support level. Okay, followed by, okay, here. Okay, see that the price has reaches this area multiple times, the 102.097 level. Okay, so this is my second support. First support is right here, swing low. And for resistance, okay, I can take up this level, this first resistance over here. Okay, you can see that the price has an overlap resistance followed by, this is also a good level. Okay, where the price, it captures the lots of rejections here, and also a bounce, small little bounce, and bounce again. Okay, so this is a good pullback level. Yes, for retracements, okay, I do have the 38.2 and 61. Okay, that aligns with my first and second resistance level. Okay, and for the support side, okay, there isn't any Fibonacci level. Okay, so this is the, let's take a look at the Ichimoku. And as you can see that the price is a bearish, okay, way below the Ichimoku cloud. Okay, and no signs of reversal yet. Okay, even when CPI opened, okay, it went up by a bit. Okay, just about $1. Then after I start to reverse once again. Okay, so it's kind of ranging in between the first support and first resistance level right now. Okay, so give me a second. So I have a request for gold. Okay, so let's take a look at gold. Okay. USDTRY. Okay, looking through the comments right now. Okay, so first up, my first resistance. I will place it at this the tip of my wick. Okay, and for, yeah, actually I do have another resistance over here. Okay, this will be my immediate resistance, the dotted. Okay, and this is a good level of support. Okay, so we do have a overlap resistance. Okay, and followed by swing low support here. Okay, so price looks like it will continue to fall to our first support level. Okay, thereafter, the next support, it will be quite far down, be around this level. These are not very significant, so my next support will be pretty far around this level. Okay. See if I can do a projection for this. Okay. So I actually do have the 61.8 projection level. Okay, that is pretty close to my first support. Okay, so this is the key support and oh, okay, sorry. I think I can draw one more retracements. Okay, for my immediate support, sorry, immediate resistance, that would be 61.8. Okay, so this is for gold. So there is a 61.8 projection that aligns quite closely with my first support level, okay, at the 2155. And there is a immediate resistance at 2177, which align quite closely with my 61.8 retracements. Okay, and the first resistance will be at the recent high, okay, 2196. Okay, so this is for gold. Okay, so I have a question. Do we have to look in higher time frames like H4 to set up resistance and support? Okay, what is the time frame that you usually trade on? Okay, because H4 is a good time frame because it helps, it's suitable for daily or day trading, intraday trading, as well as swing trading. Okay, so if you're trading on the 5-minute time frame, you could look at 30 minutes, 1 hour, or H4 to do your charting. And if you're trading the longer time frame, like 4 hour and daily or the weekly one, you could also use the H4. Okay. If you are using the H1 for the longer time frame, okay, the price will move too fast. Okay. Whereas the H4, you give it more time to reach your support and resistance, and also there's less noise. So the trend line will be more, the trend will be more significant. Okay, so you can see the trend line more clearly. Okay, that's why H4 is a popular time frame used for charting. Okay, and next up, let's take a look at the pound dollar. Okay, first level of resistance right here. Okay, so there's a small little swing high here. So yeah, not really a swing high, but there's rejections in price. You can see that price starts to pull back. Okay, reacting off the first resistance level. Okay, second one will be the swing high here. Okay, as for the support, okay, this is my first support, and followed by okay, my second support will be right over here. Okay, and I could draw a retracement. Okay, looks like there's a, yep, nice. So there's a 50% Fibonacci retracement that aligns with my first resistance level. Okay, and could use the swing low to swing high. There's also the 50% and 61. 50 is a bit far. I'm just going to use the 61%. Okay, this one is aligning with the second support. Okay, I'm going to try drawing a projection here. It's a bit too far. Okay. So this is for the pound dollar. Okay, still bullish above the Ichimoku cloud. But it could be could have some resistance at the 1.28 level. Okay, so if the momentum is not strong enough, it could pull back. Okay, could react off the first resistance and forward to the first support. Okay, let's look at the next request. Okay, so I have a request for USD TRY, US dollar to Turkish lira. Okay, this is interesting. Wow. Oh, this is a very interesting chart. Okay, I love to. Okay, so give me some time to explore it. Wow. Okay. Finding support and resistance is tough on this one. Okay, so I'm at the daily chart. Again, let's remove the cloud weekly. Hmm. Yeah, I'm gonna try. Yes, price is still on the rise. Okay, not able to really draw a resistance. Okay, for support over here. Okay, I'm using the monthly time frame. Okay, for support. As the lower time frame has like no, really any support or resistance level. Okay, so now I'm just picking the level whereby there's a lot of contact point. Okay, where price cuts across. So second support. Okay. I can draw these also. Yeah, I think there's really no resistance at all. It is pretty cool. Okay, I'm sorry, but I'm not able to find a resistance for this. Okay, US dollar, and Turkish lira pair. This is the best that I could. Yeah, I don't think can draw. There's no downtrend. First downtrend just here. There's no. Maybe a downtrend. Okay, so this is the support level. Unable to find resistance. I'm so sorry. Okay, so I have a question for stop loss and taking profit. Okay, okay, let's look at the gold currency pair. Okay, so back to the gold. On the H4 chart, okay. So for setting, wait a second, stop loss and also take profit level. Okay, let's just say that you had a sell entry here. Okay, sell entry, and you want the price. Okay, you are predicting that price could fall to first support at 2155. Okay, and ideally, take profit should be before the support level. Okay, support or resistance level. Okay, that will be your take profit. Okay, okay, this is because when the price reverse, okay, when the price is on a downtrend, it could go all the way to our support level. Okay, and once it hits support, most likely price will reverse. Okay, most likely price will reverse. Okay, hence if you place your support, your take profit right before the support, okay, you are able to capture the profit when the price is going down. Okay, but if you place your take profit beyond, okay, your support level, price could, fall all the way to support and bounce, hence missing your take profit level. Okay, so it's advisable to place your take profit before your support. Okay, and for stop loss, okay, stop loss, say you want it to place your stop loss at after your sell entry. Okay, stop loss. Okay, because also the same theory, when price goes down, okay, sell entry is also a resistance level. So when it's at the resistance, most likely when it touches the resistance, it will reverse off resistance and go to your support level. Okay, so when you place your stop loss, okay, beyond the resistance or your entry, okay, meaning that you are able to avoid getting stopped out. Because when this happens, if you place your stop loss before the sell entry, okay, when the price bounce, okay, you will hit your stop loss before taking profit. Okay, so you get stop out. So it's advisable to place your stop loss beyond, okay, and take profit before. Okay, okay, and the red and green on the background of the chart. Oh yes, this is the Ichimoku indicator. Okay, so Ichimoku, anything above this cloud, like what is happening right now, okay, above the green bullish cloud, okay, meaning that the price momentum is bullish, okay, and if the price goes below, okay, the Ichimoku cloud like here, in the example here, okay, and it's below the red cloud, meaning that it's actually in the bearish. So prices like, give you an example. Okay, so if you see the price entering the cloud, okay, most likely momentum could change. So there's a possibility momentum could change. Okay, so we can use a Ichimoku for like a indicator to see the momentum, whether it is a bullish or bearish, or whether it is, about to reverse. Okay, but you could also like utilize other indicators, so not just Ichimoku. Okay, can also use indicator like RSI MACD. and even Bollinger Bands. Or RSI is also easier to see. Okay, so when price is very okay, so each RSI, okay, anything above 70, okay, meaning that is kind of overbought, okay, and price could reverse soon, just like in this case, okay, when price is on the way up, and RSI is also going up in the overbought area, so there's a possibility where price could retrace down. Okay, price will retrace down. It's just that when, okay, and anything below 20, sorry, 30, okay, meaning that price is very oversold. Okay, so when it's oversold, just to give it some time, okay, our momentum will change, so price will go back up once again. So this is also another indicator to look at the momentum. So you can use it together with the Ichimoku cloud to help you see whether there's a change in momentum, whether reversal is coming. Mhm. Okay, now let's take a look at the dollar yen. Um, okay. Okay, so for dollar yen, okay, price is overall is a downtrend, and yeah, I think there's some kind of resistance here. Okay, so this will be my immediate resistance. Okay, right at the current price. Okay, the swing low will be my support. Okay, I could stretch it across to connect this wick here. And my second support level to be too close. This will be my second support. Okay, as for resistance, okay, there is resistance here, the 148. You could also bring it down. Okay. So this is first resistance, and I guess second level. Okay, second resistance here. Okay, capturing the bounces. Okay, and I'm gonna draw a Fibonacci. That's my swing high, so swing low. Okay, so I do have 50%. Okay, that aligns with my first resistance. Okay, so this will be for dollar yen. Okay, the red dotted line at 147, this one. Okay, this is like the immediate, I use the dotted line as an immediate resistance. Okay, red dotted for immediate resistance and green dotted for immediate support. If you example, immediate support, okay, meaning that the resistance is at the current price right now. Okay, just a method for me to differentiate between, the immediate resistance and the actual first resistance. Okay, I want to see if price will break below or above this immediate resistance level. Okay, where to start Fibonacci level from? So for Fibonacci, it's best to take the most recent swing high to swing low. So look for the most recent swing high and swing lows level. Okay, gonna use this example over here. Okay, this chart is easier to see. So, okay, so I can use this swing low to swing high. Okay, when you're picking the lower point here, just need to make sure that this is the lowest. Okay, there is nothing lower than this price on the right of the chart. Okay, and you could draw the retracement from. For an uptrend, you'll be down to up. Okay, and the downtrend is up to down. Okay, it always starts with 100. And for a for this uptrend, okay, and price already has retraced. So those prices, those level that have been broken, okay, like 38, 38, 23 are not usable because it has already been broken. Okay, so I will keep those level that are still valid, like 61. Okay, I will choose the level that is close to the support and resistance that I have drawn. Okay, and I can also draw this downtrend because it has not made a new low. Okay, but this is only to find the retracement level for the resistance here. Okay. Euro dollar. Okay, let's take a look at euro dollar. Okay, yes. So looking at this chart, okay, the price could, the momentum could reverse, so it could become bullish. Okay, it's still kind of below the Ichimoku cloud. Okay, but I believe for Japanese yen, they do have a statement released on the 19th yet. Yeah, on the 19th. So there's a monetary policy statement. Okay, so this could become bearish once again, depending on the data release. Okay, so for euro yen, okay, so I have a immediate support, okay, right at the current price, 161. Okay, and support level, once again. Okay, my first support, 160. And second support will be the swing low here. Okay, and for resistance, Okay. And this could be my first resistance. And the second resistance will be at the tip here, swing high here. Okay, and I could use the recent swing high to swing low, look for retracement level. So I do have the 78.6 Fibonacci retracement. Okay, that is close to our first resistance. Okay, so this is for the Euro Yen. Okay, price is kind of above my immediate support. Okay, but it's bullish. It's not too strong, but I'm hoping that price could bounce off this support level and rise to resistance. Okay, and euro dollar. Yes, we have already done euro dollar. Let me show you the chart. Oh no, sorry, I forgot. There's a dollar index. I haven't uh draw the euro dollar. Okay, so this is my first resistance level. And I do have a support here. First support. And I see a second resistance at the swing high. Okay, and my second support, okay, will be right here. So this chart is a little bit too choppy. Okay, so to draw, okay, retracement. Okay, the best is to have more candles aligned close to this trend line. So if you see this trend line here, the dotted blue trend line, okay, you want the candles to be close to the trend line. Most of the candles to be close. So if I were to use this for retracement, okay, this is a bit out of the trend line. Okay, so it wouldn't be as accurate. Okay, you can also draw retracement using the small swing high to swing low. Okay, so example this. You pick the swing high, okay, and pick the low. Okay, and the figures will come out. Okay, so give you an example here. So after I chose the swing high and swing low, okay, this is to see how far the price will retrace. Okay, so this is to predict how far this price here will retrace to. Okay, so it could go down to the 23.6 level. Okay, but right now is retraced to 38.2. Okay, see the dotted line here is yes retraced to 38 and looks like there's a bounce. Okay, so you can use retracements to see how far the most current trend is going to retrace to. And also you can use it to supplement your support and resistance level. Okay, so if it happens to line up closely to your support and resistance level, okay, it will make your support and resistance stronger. Okay, and this is for euro dollar. You can see that it's kind of still current, but momentum is bearish. Okay, but the overall momentum of the chart is bullish. Okay, you can see overall it's an uptrend. Okay, just that the current price has react off my first resistance and it's going to my support level. Okay, let's look at the Kiwi dollar. Okay, for support, okay, most recent swing low. Okay, I can connect to the week behind. This is my first support. And second support will be the swing low here, or yep, okay, this will be my second support. Okay, and for resistance, okay, it will be at the swing high here, my first resistance, followed by this. Okay, for my second resistance, I could stretch it across. So connect the wicks over here. So it makes it a stronger level of resistance. Okay, and for my current price, I could also draw a retracement. Okay, so this is the most recent swing high. Okay, and this is where price is retracing down. Okay, as long as the price has already had a low, so like this, okay, price has already come down. Oops. So if you notice that price, there's a high here, 1, and there's a low here, 2, and price is on an uptrend. You could use this to draw retracement, okay? To draw the swing low retracement, the downtrend retracement, okay? And for the uptrend retracement, okay, just need to make sure that there's a swing low, and it is the most recent swing low. There's nothing lower on the right side. Okay, so 1, and also a swing high point 2. Okay, you just need to connect the dots together. So for uptrend, as this is price is going up, right? So this is an uptrend. Okay, click on the down and up. So if you're using trading view, this will be the tool, Fibonacci retracement. Okay, and you can see the levels coming out. And happens that 50% aligns with my first support. Okay, so I'm just gonna keep 50% because I'm only using it to supplement my support and resistance level. Okay, if you are not, if not, you can also use it to see how far it can retrace to. Okay, the golden ratios are actually the 61 and 78. So you will want a retracement, you will want the price to retrace till around the 68. Okay. Thereafter, the bounce will be a stronger one. So when price retrace as much as 68, okay, it could bounce and rise higher. Okay, if it's only 23, then the bounce wouldn't be very strong. It could be just a small little bounce like this, and then they will reverse back down. Okay, so this is how to draw retracement. Then okay, I will remain my 50%. Okay, you could also draw this, but I don't think there is any. Oh, actually there's a 78.6. Okay, this aligns with my first resistance. Okay, so this is for Kiwi dollar. the price of silver. Okay, you're welcome, Andrews. Okay, and price of silver. Second, do I have it in my chart? Is it XTI? No, that's oil. What's the symbol for silver? Templates for trading view. You mean my projections and all these templates? Okay, so you just need to click on the ray. Okay, right click. Sorry, just double click. This will come out and then you can type your text accordingly. After you're done, you also can change the color. Click this and save drawing template as. Okay, so this is the same as for retracement. Okay, and template. Okay, sorry, settings. Double click. I also get confused by it sometimes. Okay, then you untick whatever you don't want. You just leave this. So this is 50%. So just leave the 50, 0, and 1. Okay, then you save the template as 50%. Okay, just a bit tedious. Okay, dollar franc. Okay, so for dollar franc, give me a second. Okay, so I do see resistance here. Okay, there's a lot of rejections at this point, at this price, and then price bounces off. So this is my first resistance. Okay, my support will be the swing high. Okay, multi-swing high. Sorry, my second resistance will be the multi-swing high. And my support level. Okay, can use this for my first support. Okay, followed by second support. Okay, this is my second support. Okay, draw a retracement here. Okay, so I have 50% that aligns with my first resistance level. Okay, so this is for the dollar franc. Looks like price is still bearish. Could go up to first resistance and reverse. Okay. Dollar and Mexican peso. Oh, is this like an all-time low? Okay, my first support is here. Okay, which I think I only have one support level. Okay, and I do see resistance. Okay. And my second resistance is here. Yeah, I switch to the higher time frame. Okay, so an example here will be this. Okay, you see that the price is still moving. It hasn't make a new low. Okay, so unless this candle close at this price and the next candle is higher, okay, if not, you cannot use this trend down as a Fibonacci retracement, okay, because the price is still active. The new low hasn't been formed. Okay, same for a new high. So if a new high hasn't been formed, you cannot use it for Fibonacci. So see if there is a projection. Okay, so I do have a Fibonacci projection of 100% near my first support. Okay, so it makes it a stronger support level. So price could bounce. Okay, or if there's any adverse news, it could, break below the first support level. What is the symbol for silver? Yeah, I'm just gonna take this silver. Okay, so silver. Okay, resistance right here, swing high. Okay, this is my support. And my second support. Okay, this overlap here will be my second support. Right, seems okay too. And for second resistance, okay, a bit of swing high over here. Okay, so this will be for silver. Okay, so this will be all for today's session. Thank you everyone for all your questions and answer. I love your participation, and I hope to see you guys at the next session. And have a great trading week ahead. Okay, thank you everyone. Thank you. Have a great week. Bye bye.